Hey everybody, welcome to the free video. Fun trading today, especially in the live futures trading class. Some great moves to the downside into the close. So let's take a quick look at how that's set up. So we started off with high ticks at the open. When you start off with the high ticks at the open, it's kind of like a hunter with a gun seeing an animal and then emptying their whole gun, hoping to hurt the animal or kill the animal for food or whatever, and they miss it. And now they don't have any bullets. And this is what happens here. So the market gapped up, okay, but with these high tick reading, it's like the market's kind of shot all their bullets at the open there. And once that was done, the sellers could have their way with the market. And you can see the ADD cross below zero, the 5-period moving average, tagged that minus 500 level. But more importantly, the whole time here, the VIX was coming up and all the put call was rising. It never got to 1. And then this rally here was just pathetic. Just a grind. And then, of course, the last day of the month typically sends us up for end to the close selling on accelerating volume, and we got that in a big way. So the question now is, what happens next? Well, if we look at the daily chart here, the key sectors, and of course for the S&Ps, if we do actually dip back below this 50% retracement level by the end of the week, that will be bad. It'll be a very ugly weekly candle and can actually set us up for new lows, believe it or not. But let's go through and look at the sectors, the key sectors real quick. So XLK, tech's holding up great. You've got Amazon, which actually isn't even part of the sector, but Apple, Netflix, etc., all are holding up stellar in this environment. Notable exception is Facebook, which actually is starting to implode a little bit. Financials, on the other hand, had a pretty nasty day. This is an island reversal, or almost an island reversal, not quite. And those are fairly bearish. All right. Healthcare has been on a tear to the downside. Okay, just getting rejected in a big way here. Lots of selling coming in. XLY, consumer discretionary, you can see it's been holding up pretty good, but it also got whacked along with everybody else. Industrials whacked along with everyone else. Now XLP, with consumer staples, this thing hasn't even been able to get off the ground. Okay, so this is horrid in terms of a bearish pattern here. And remember, if these sectors, if you see some divergences in these sectors, that's completely opposite of what's going on in some of the indexes. Like, the S&P actually has had a good rally, but XLP, hasn't participated, and the only reason XLY has been so good is because one of its largest components is Amazon, right? So again, some chinks in the armor there. Energy rolling over and dying. Basic select materials, big selling here. And then biotech, which had been trying to bounce, is rolling over too. So we've got here is that especially this week, is that we've got a battle going on. We had a lot of this movement kind of related to short volatility funds blowing up and the manipulation of the VIX and having to buy VIX futures to do it. All right, so that's going to cause some unwinding going on. And then yesterday we actually had SVXY and UVXY having to rebalance. That caused some more buying of the VIX. But today we had some real selling into the end of the month. So tomorrow, March 1st, is going to be super important for the markets. If we go back here and look really for the S&Ps, and in fact, let's just look at the spiders here. So the spiders here, again, fantastic rally. And if we look at the 618, or just kind of where we are Fibonacci-wise here, you can see we're back in between the 618 and the 50, okay? And you can see I've got it zoomed in right here. So there's the 618 and there's the 50. But how this works is that you can see we spent a lot of time consolidating between those two levels, and this is kind of the death zone, the decision zone, where rallies can often fail and lead to the next leg lower. Well, here is almost worse. If we close the week below the 50, we're going to have a nasty weekly candle, and we're going to be setting up for new lows. All right, so we got to be, yes, there's a handful of stocks out there, and they're the right ones, like Amazon and Apple and Netflix. They look great. But a lot of these sectors look, they're showing red flags. And of course, there are key stocks like Facebook and stuff like that that are also rolling over. All right. Hope it helps. You guys have a good one, and we'll see you at the next update.